They've left them on hold. So 5% is the decision, stays at 5%. That decision just through just now. And I would say not really a surprise in as much as that is the way that most economists thought they were going to go. The focus now is going to be on the next meeting, which comes in November. That is the meeting where I think everyone thought they were going to start cutting interest rates. Let's recall, though, first of all, that they did begin cutting interest rates back in August. So they have begun on this process of them coming down, but they're coming down relatively gradually. So a 0.25 percentage point cut happened in August. They were down from 5.25 to 5%. This time around, no change, but the expectation is next time around in November, it looks like there would be another cut as well. There had been a bit of speculation because the US Central Bank, the Federal Reserve, cut interest rates last night by more than expected, by a full 0.5 percentage point. But nonetheless, the bank had been expected to leave things on hold, and that is indeed what's happened. Just looking at the breakdown, so we've got the minutes through from that meeting. What happens this time around? There's no press conference or anything, although we may get a word from Andrew Bailey, the governor, a little bit later on. There's no press conference, but we do get details of the minutes to this decision. And it looks like one of the members of the 9-person committee voted for a cut in interest rates, whereas 8 of them voted to leave them on hold. So it's an 8-1 vote to leave interest rates on hold. And a lot of people will look at that and say, more or less what we expected. We think they're still going to be cutting interest rates in the future, and then again and again down towards potentially kind of 3.5% or so in the next 2 years or so. But it's a gradual process, and obviously, even at 3.5%, those interest rates are going to be considerably higher than those levels that we might have become slightly accustomed to following the financial crisis, when they were down basically at 0 or just above 0. So the decision today, not a surprise, to leave interest rates on hold at 5%. And now the focus will be on what happens next. Do they cut, as expected, down to 4.75% in November? Do they speed up the pace if indeed it looks like the economy needs it? Worth saying at the moment, the economy not enormously strong. I mean, the first half of the year was pretty strong, but the GDP numbers more recently not enormously strong. And certainly some people are looking at the labour market, looking at unemployment and saying there are signs of strain from higher interest rates. So it might well be time for the Bank of England to start thinking about cutting interest rates to try to make, to reduce the pain, because effectively interest rates are a form of economic pain, particularly for those who are borrowing right now. So 5% unchanged at this meeting, and an 8-1 vote for the decision from the Monetary Policy Committee.